When transportation companies think about insurance, we usually think about two things: coverage and, let's be honest, what the cost will be. But what if we looked at it differently? Because the things that make an insurance say that's a good risk are often the same things that make a customer say that's the type of carrier I want to work with. Strong operations, good hiring practices, safety, training, technology, accountability. So, what if becoming a better insurance risk could actually make you a better business? Well, that's what we'll be talking about today. Hello, everyone, and welcome to CLDA's Final Mile Fridays. I'm Lorena Camargo, president of the CLDA, the Customized Logistics and Delivery Association, and I'm your host for this series. At CLDA, we're all about bringing together the people, ideas, and conversations that move our industry forward. And Final Mile Fridays is one more way that we're doing that with practical conversations that you can take back to your business. So if you're a longtime member of the CLDA community, welcome back. And if you're discovering us for the very first time, we're so glad that you're here. Today, I'm joined by someone who knows transportation risk and insurance very well, Mr. Brian Jungeberg with Brown and Brown. Brian has been working with final mile delivery companies for over 23 years, helping them minimize their risk while maximizing their return on investment. Just as the final mile industry continually evolves, so must your insurance program, which is what Brian specializes in. Brian, welcome to Final Mile Fridays. It's so great to have you here.
Thanks for having me, Lorena. This is an awesome series that you're doing, and I am very honored to be a part of the first season of this. So thanks for having me.
Of course, although, I am nervous because the last time that I saw you, you traumatized me, and I will never be playing golf in the heat ever again.
Let's say the heat traumatized you. I don't think it was, hopefully, it wasn't your foursome, but if we did, give us another shot. We'll play again at the next industry outing. Okay.
Yeah, we'll see. Well, okay, let's start with the big question though. Let's say an underwriter is looking at two transportation companies. And I will tell you, one of my favorite parts of doing this series is that obviously, like, I'm a career company owner, but I get to put insurance people on the hot seat. So some of these questions may be from the CLD community, they may be from me. But let's
Fair.
just say an underwriter is looking at two transportation companies. They're roughly the same size, similar type of operation, maybe even similar revenue, but yet their premiums will be different. One is looked at as a strong risk, and then the other one makes an underwriter a little nervous. So, what separates those two companies, and what's the underwriter seeing that we as business owners may not be seeing?
Yeah, I think it's a great question. There's a lot of factors that play into it, right? So, a lot of times you will have the situation where it's a blended risk, right? We would call that, where you have a fleet of vehicles and you're using independent contractors or employees who drive their own vehicles. And a lot of what is focused on in I'll say the last decade easily here is the auto exposure. That's been the one spot across transportation as a vertical or as an industry where the insurance industry has lost money. So that includes trucking, final mile, middle mile, anything you can lump into transportation as an industry. The auto, especially the auto liability side of things for the insurance world, has struggled to turn a profit, which is why you've seen your auto rates continue to go up and up and up and up. When an underwriter looks at two similar risks, a lot of what it gets into is the granular details of the company and how you're operating. In order to maximize your credits or the underwriter's consideration, being able to really display that you're a company that takes safety and compliance seriously and enforces it is the number one way to differentiate yourself and maximize your savings on the insurance side. We have a lot of customers who the first thing they'll say is, "Hey, we have telematics." Great. That is now an expectation. So not having telematics would end up being something that probably an underwriter would look at and say, you know what? I don't know that that's serious because they don't have telematics in the vehicles. Now, in our space, we know it's difficult with especially if you're running an IC model, how you can, deploy telematics or other types of systems into that workforce to bring more of a safety culture. And there are some things you can do, but overall, I think the more that you can highlight what you do from safety and operations and compliance and how you enforce that is gonna be the differentiator.
Now, I like that you mentioned safety culture because that's very much different than having a safety program because safety is important. We all know that. We all have our policies, procedures, do some type of training, but there's a difference between having a safety culture. So, from your perspective, what does that look like?
Yeah, a great one. Real simple. I hear this, I won't say every day, but I hear it a lot. We will go through, we're working with somebody on their renewal or a prospective new client, and we'll always ask for the driver's list and we'll run motor vehicle records, right? Why? Because the insurance markets all require that we provide motor vehicle records to them. Why? Because they can very quickly tell whether there's a safety culture or not based on what the driver's violations look like across your driver pool. And what we'll hear all the time is, well, we can't get rid of him. He's my best driver or she's my best driver. And while that might be true, they may also be your riskiest driver. So many times, a safety culture
Mm.
versus just having a safety program would say, if we have a driver who is our best driver and has racked up 2 violations this past year and has a slew of violations in the past, are we willing to part ways with that driver? Right? Safety culture would say, we know that's just a running clock before there's going to be a claim involving that driver. We need to separate
Mm.
ourselves from them as quickly as we can. Right? That's safety culture, making those hard decisions.
Yeah. Okay. Now, when it comes to safety programs, we all use AI to write certain emails, especially like sales stuff. Do you think, I mean, can an underwriter tell when we just copied and pasted a safety program from ChatGPT?
Yes, 100%.
Is there anything crazy that you've seen out there, like maybe like the little brackets or something?
It's always a missed editing. The number of things I see haven't really been AI based, believe it or not. It's been we copy and pasted one from another company because we know we needed it, but we forgot to change some of the words in there that may still have the company we copied it from's name in there. That doesn't help out at all. Obviously, there that gets red flagged, and you kind of have a, well, okay, so we know they don't really have one, but they're now going to put something in front of us. And here's and I think this is a natural, human element to it, right? If the underwriter sees that, their immediate next question is, what else aren't you telling me? Right? And they're going on an application. They're not sitting here having a conversation a lot of times face to face where you can read people a little easier. So it's very much to them in black and white on paper or in an email, right? And they need to try to sift through it. So it is not worth the risk. It would be better off to say, you know what? We have one, but we don't really enforce it. But you know what? We really want to put one into effect. What can you help us develop, or what have you seen as best practices? I think that collaboration goes a long way to help in the cause.
Okay, great. Good to know. So proofread everything that we send our underwriter because they will remember it.
Like
Um,
elephants. I always say they're like elephants, right? And along those lines, as long as we're kind of chit-chatting about underwriters, I think there are a lot of people that would say, "Hey, I want to go out to the market every year and shop the insurance." It's a big line item for most companies in this space. We understand that. There's not one insurance broker in this space that would argue that point. The problem becomes it's kind of a limited playing field of insurers out there. And if you go out every year and you're going to the same markets, those underwriters that didn't win your business the year before typically don't give it that big of an effort the next year. You kind of need to let this go in every couple, 2, 3. We suggest a 3-year cycle because it allows you to develop a really good relationship with the market you're with. And then you have some leverage there when you go back out into the market 3 years later and look at other options. So I think a lot of people feel like that should be an every year deal. I think we would all suggest maybe there's a better approach to that.
so let's dig a little deeper on that. What do transportation companies think insurance companies care about or the underwriter, but they're not as important?
I think that they believe they care a lot about the commodities you're moving, and I think that plays into it. It's not the deciding factor on anything unless you're really getting in the weeds on a cargo form or a professional liability or errors and emissions form. The auto is by and large the biggest thing. So everything related around the auto exposures are what the underwriters are very dialed into, and they're going to ask a lot of questions, and they're used to brokers that don't specialize in this industry, giving them bad information about how you do what you do. And I think that has kind of muddied the waters in recent years with the marketplace. And we're seeing a little bit of consolidation where there's some insurers that jumped in and were writing hired and non-owned coverage that had never really written it before, and they were using very limited forms, and they weren't asking a lot of questions. And now all of a sudden, a year later, 2 years later, they've paused writing any business, which tells us they probably learned some really hard lessons by not asking the kind of questions that they may have wanted to in hindsight. So I think that they care a lot about what you're doing on the auto side, how you're managing your drivers, how you're managing your fleet. Maintenance is a big thing on the fleet side that I think people underestimate, because we have all lived through the growth of Amazon. And what I would tell you is the Amazon DSPs did not do a lot of favors to the final mile delivery space when it comes to insurance. And what was seen was that those DSPs, when the money got tight, they stopped maintaining their fleets of vehicles. And that led to losses that could have been avoided had they not done that, right? Failed brakes, bad tires, transmissions, everything like that. And that is where everyone's coming from on the underwriting side still.
Interesting. So you mentioned a couple things, and most of our CLDA audience, work with have smaller compliance teams. Sometimes it's just the owner. But a lot of our members also are just getting into this industry. So I'm asking this question because this is where I was at when I started my business. I was personally insured with, I'll just say their name, State Farm, right?
Hmm?
So when I started my business, I was like, I was young. I didn't know, like, okay, could I just go to State Farm to like get my final mile insurance? Like, what's the difference between, like, obviously they're a great provider, versus going to someone that specializes in this type of like final mile business insurance?
Yeah, I think there's a couple of things. One, we run into a lot is do they understand your business? And I'll tell you why I think that's supremely important. Is not does the broker understand your business? It's does the insurer understand your business and how dynamic it can be? Because there are a lot of times that the way your businesses grow are incredibly dynamic. You may be in this vertical today, but you may go into this vertical tomorrow. And we know that the pace that business moves, you may never call your insurance broker and tell them that you got into this, right? So do the policy forms that you have protect you if you start doing that type of work, right? Medical courier is a great one, especially when it comes to the protection there and the goods you're moving potentially, and some of the impact if there is a loss of the goods while you're moving them. It can be very, very financially stressful. We need to make sure that that's taken care of the right way. So a lot of times what we do with the specialized insurers is to develop coverage forms that are very forward thinking and broad in coverage, so that if you change kind of your avenue or you add a lane or a vertical, that coverage is there without even having to think about it. Now, the State Farms of the world, and one of my best friends is a State Farm agent, love the guy to death, are very vanilla. They're very Main Street USA type forms that are not used to working with businesses that are as dynamic as what the final mile space is.
Right, absolutely. So we do have a comment, Henry. Thank you so much for tuning in. You haven't bored him, Brian, so that's
All
good. No,
right.
I'm just kidding. If you guys have any questions though, feel free to post them in the comments, and we'll go ahead and display them on the screen. All right, so let's go back to technology. AI is here, still scares people, but depends on how we use it for our business. It could be a good thing, right? So you
Mhm.
mentioned telematics as well. There's cameras, GPS, driver monitoring, so many like platforms out there and devices. and companies are investing in these tools. Now, help me bust this myth, but if I install cameras and telematics in all my vehicles, does that automatically make me a better insurance risk?
No, it doesn't. And I'll tell you why. Because if you install those and never do anything proactively with drivers when things are flagged, you've actually now hurt yourself if there is a claim or a loss. And they go back and pull all of the data and the videos and the driver grading, right? And they can just show that you had all this at your fingertips and did nothing with it. So it's one part of the solution. I think they're great tools, but like any tools, if they're not used regularly, consistently, and proactively, then they become the opposite. They become a potential risk or exposure to the company. So you have to be very, I'm gonna say very careful. You should be diligent. Like if we decide to do this, and I would say to the group, you should, right? I think there's a lot of times where we have seen that those systems have helped to prove that you are not a careless company that cut across 3 lanes of traffic and caused an accident, when in fact the other driver hit you and your guy was doing exactly what he should have been, driving the speed limit in a lane, leaving plenty of assured clear distance, right? So now the flip side of that is I had a client who had a camera system and was not being super proactive. And in one of the losses, when they pulled the film, the driver was wearing AirPods, listening to music. And so that was a pretty quick one where they were settling that claim very quickly before it got out of hand, because he was very clearly at fault based on not following the rules of the road.
Oh, yikes. That's
Yeah.
actually interesting because that's something that we don't think about. And obviously, someone selling us this technology is not going to tell us, like, hey, got to use it right or else it will hurt you.
Cutting edge, like when they first came out, that was what the systems were sold on, right? You put this in your vehicles, you're going to get a discount on the insurance. And it was true. It was true for a while. And then as like most things, I'll tell you in the insurance space, they develop based on the legal atmosphere. So our world is a reaction to what's happened in the courts, right? And so as those camera systems came into play in claims and accidents, and all of a sudden it was not exactly helping everything depending on what was on the footage, it kind of changes what the insurance world does with that data and how you look at those tools and how you're using them or not using them.
Oh, okay, cool.
Yeah.
Well, we have a comment from Mark Chisano. Um, what Brian just mentioned about Netradine, not sure if I pronounced that right,
Yeah.
Netradine, or some safety cameras and device in an IC's vehicle. This is a big barrier for the industry and would be perfect if the third-party administrators helped ensure having them is a requirement from the third-party administrators and also provide them a way for them to get them and have a weekly deduction. This is something I recommended at a CLDA panel on insurance. So not sure if this is more of a comment or a question, but it is a great point because like you also mentioned, Brian, a lot of final mile companies rely on ICs. And so it's a slippery slope where like this is, I mean, this is for your safety, but also it doesn't just keep the insurance premiums down for the actual carrier, but for the actual driver. So I'm not sure if you have any recommendations there.
I think that's a great idea for Mark. I would wholeheartedly agree. You get into some labor law issues where I will be the first to tell you, not an attorney, not equipped to answer those depending on the geography you're in. That can either be helpful or obviously can be very tough waters to swim in. But I think having a contractual obligation with the drivers where they would have that, or you would have visibility to their performance in their vehicle, would be extremely powerful on the insurance side. Recognizing that is a lot easier said than done. And anytime, I think that the struggle that I've seen through my time with this industry is it's an incredibly dynamic space. And I love that about it. It is a challenge for driver retention and driver recruiting a lot. And so anytime you start to put up a barrier of entry with drivers or a contractual obligation, it's not lost on me that could make it more challenging to get drivers on board. Or you may say, and we saw this, and Mark's been around long enough to know this too. Like we saw this with bank cargo when there was a lot of bank cargo movements going on, and there was a lot of losses with it. And I remember being at a meeting, and someone said, we all need to do this. And the next guy stood up and said, I agree, but we all know that if we go back and we start selling against each other, I'm just going to not do that because it's cheaper for me and I'm going to probably win the business. So I think until all of the industry kind of gets on board with that and can all push it together, right? It's going to be a challenge because the drivers will always go where it's easier and they have less to do, to make a buck.
Right. Okay, thanks. And you know what? You actually reminded me I do need to start these segments with like any advice here is just advice. It's not legally enforced. Every business knows like their business. So these are just strategies that we're sharing. And if you guys want to have like private or direct conversations, we're definitely happy to do so. You have a fan in the comments. Hey Walter, thanks for tuning in.
Hey, thanks, Walter. I'd love to talk with you.
All right, so let's move on to expensive mistakes. So you work with transportation companies each day, and I'm sure there's a few mistakes that you see repeatedly. So which ones are the mistakes you wish that we as carriers would just stop making?
I think there's the most common mistake we see is typically folks that they assume a claim or a potential claim will just go away, and not getting out in front of situations with the insurance adjuster and maybe legal counsel from the insurance side can be a very costly mistake. And there's always a fear that if you turn in a claim, you're immediately going to be in the doghouse and you're not going to get a renewal or it's going to be up 150%. And that's not the case. I think that a lot of times if we were receiving information as soon as it had happened and everybody could get their arms around it quickly and start to work on it, there would be far more favorable outcomes to those claims or those court cases than there have been. So that, to me, you need to share if something potentially has happened that you know about. Please share that immediately with your broker and get them involved so that they can involve the insurance adjuster.
All right, thank you. We do have another question from Michael. Hey, thanks for tuning in. What sort of training opportunities are available for drivers that can positively affect their insurance premiums?
Yes, there's a number of providers that can work on within different fronts or segments, or I'll say tracks with drivers to do training, right? Whether it's medical courier type training with my good friend Ken Arnold at Integrity, I'll put a plug in for him, right? Or you have some general safety compliance training with folks like transportation compliance consultants, Martha French. You have Pro Safety, who does some safety and compliance training. They also do safety visits. There are folks internally at Brown and Brown that we have that can help put together programs for your driver population. One is she's a former DOT compliance officer, so she knows that side of it very well. So there are resources. If your broker doesn't have them, you can always shoot me a note. I'd be happy to share with you some of the folks that we know in the space that provide that. And I do believe, without speaking out of school here, that all of the third-party management companies also offer different training tracks, as well as someone like the Association for Delivery Drivers has training available. So kind of just depends on what you want and how you want to deploy it, but they're certainly out there. And I would tell you, I think they're all very affordable considering what you get at the end of it in terms of safety compliance and being able to share that story with your insurance carriers.
And this is exactly why you should be going to someone that specializes in final mile insurance because they have access to all these resources. They're well connected, so they will guide you in the right direction. So thank you all for like the questions. Keep them coming. I do want to move on to growth because I don't know about you, but I've never met another business owner that's like, you know what? No, I don't want to keep growing my business. I'm good where I'm at, right? We all want to grow. But sometimes you can grow too fast. You land a major account, suddenly you need more drivers by Monday, more vehicles, maybe another location. Everything starts moving really quickly. So, from the risk management perspective, with insurance, can a transportation company actually be growing too fast?
Yes. In fact, it's one of the questions that is asked almost immediately when you turn in an application. If you look at most of the applications out there, they ask you, if it's a renewal and you've been with that insurer and all of a sudden you turn in a renewal application and it shows your driver count is up or your vehicle count is way up, there's the immediate question of, whoa, what's going on here? And that's because they know that historically fast, quick growth has led to claims because you have a lot of people moving in a lot of different directions. Your number one goal, as it should be, is to service your customer and to be able to do that as quickly as possible. But sometimes what's get lost in the shuffle is you onboard new people, they've not been part of the culture, they're a little disconnected. Everybody's moving quick. And it's just like anything else, right? In life, if you move too fast, doing something, that's where the mistakes happen. And in our world, right, if you move too quick or we're flying around, that's where we hire a driver who maybe has a questionable driving record. But we got to put a butt in the seat, so we do it. But do we go and watch that driver drive? Do we do any audit? Do we make sure that, 2 weeks in, they're doing what they're supposed to? That's where it kind of falls apart, and that's where the losses happen. So the quick growth thing is definitely something that the marketplace is honed in on, and they're going to ask you questions about what was it, right? Existing client growth is always good versus new customer. If you were going to ask me which is better, right? But they're also going to ask, okay, so it happened. So what's the game plan now for you? What have you done? What have you added into the operation for safety and compliance and structure to help support that growth safely? So have that in the back of your mind, have those strategies being developed before you get to the renewal with your insurer so you can explain that eloquently.
Great. Okay, that's definitely going to be a great takeaway from me, specifically like when it comes to growth, new business versus existing business, because I actually didn't think about it that way. But yeah, that makes sense because if you've had a customer for a long time, then the underwriter can see like, has there been any claims against like this customer versus like going into new territory.
Oh yeah, yeah. And if you work, the specialty markets, they know the business. They see it across maybe a lot of different insurance brokers, a lot of different insurers in the final mile space to say, okay, you take on XYZ customer. Well, we know that all these guys that did this work for them across the country have had claims issues. Do we really want you doing that work? Or not that we don't want you to do it, but we want you to be better than the other guys that had claims, right? So now it's okay, what can we tell you about that? And we do that a lot on the brokerage side too, right? I mean, with customers across the country, one of the advantages is that we see people that are doing very similar work in different regions that aren't competitors, that we can share kind of what we've seen work and what doesn't work to help tidy up things and avoid claims and losses. Because nobody enjoys that. That's the worst part about it, and we get that. But what you want to know is the coverage you have, what you've paid premium for. If there's a loss or a claim, that you have coverage. Period.
Great. All right. So let's go back to like the initial question when we're talking about building a company and really an underwriter is kind of looking at the same things that a potential customer is looking at, because we understand the risk that the insurance provider is taking on, but also with a new customer, they're also taking on a risk. They don't know us yet.
Mhm.
So, when sophisticated customers evaluate transportation providers, like, are there any similar characteristics that you've seen in your experience where it's just like you're becoming an adequate risk with the insurance, but also with a potential customer?
Yeah, I think explaining how I was just talking about this morning with somebody actually. So this is a really timely question, right? We were talking about the fact that we've seen Uber now has Uber Courier. DoorDash has been coming in offering deliveries to clients. And if you're in a segment that is a more I'll say has very fine detail or requires extra attention
Hmm.
to delivery work, that that's scary, right? That's just Joe Smith picking up something and taking it. He doesn't really understand some of the things that have to happen. So I think being able to articulate to your customers what you do to safeguard their goods and to safeguard them, understanding that whether anybody likes it or not, in this day and age in the United States, if your driver, whether an employer or an IC, whether owned asset or non-owned, gets into an accident where there's some bodily injury, you as the delivery company are probably getting named in a suit, and your client is going to get named in the suit once it goes through discovery. And what the client's going to expect is contractually, most of the time, that you're going to defend them. No big deal. We can do that if the coverage is set up correctly. I would always offer to our customers, I will be happy to sit down and talk with your sales team anytime, right? I want them to understand the insurance program that you have. I want them to understand why it matters to your clients, because I think if they can sit in the room and articulate what you do in operations for safety and compliance, and they can tell the customer how your insurance can help protect the customer, that's kind of a perfect situation to be able to lock that customer in and give them that warm, fuzzy feeling about how good you are at what you do. And they should hopefully never look for another provider once you've done that.
Great. So we are at time. However, there are two more things that I want us to get into because this is such a great topic. Honestly, I feel like 30 minutes is not enough. We're definitely going to
This
have
is
you
like the
back
opposite of
on.
riding in the golf cart with me. You felt like that was 8 hours, but it was only 4. But now this is going quick.
I know, right? Just and who would have thought that risk is so fascinating? Because we always, want to talk about growth and all that exciting stuff, but this is the backside of the business that is so important, specifically because if we keep our insurance premiums down, that's also an advantage to our customer because, higher insurance premiums, they have to get passed on to our customer. That's the bad side of the business.
Yeah.
So I do want to talk about emerging risks. So we talked a lot about like what final mile companies should be doing today. But is there anything, you're in a position where you may see risks developing before like us carriers see it. So is there anything like on your radar right now?
The cyber risk is by far the most emerging one we see, and it's not new. I think what's changed the game on the cyber side is the use of AI and technology to help criminals do very nefarious things and to trick good people into making bad decisions. And we've seen it time and time again. I've experienced it personally, which I posted on my LinkedIn story a while back. Fraud and deceit type claims are the ones that are coming through this industry, rapidly, between stolen cargo, but also like funds transfer fraud, where we are impersonating a client or a payable, and we have duped somebody internally to send money somewhere, and that money is gone. Just had that conversation, ironically, this morning with a client who, is trying to recover money that was a fraudulent check worth about $52,000. So luckily they have coverage. It should not be an issue, but that's the kind of things that we're seeing. I won't say on a daily basis, but certainly weekly across our customer base.
Yikes. Okay. Cybersecurity, that's something that we don't think about because we just think we're on the road delivering packages. But that's definitely
Here's the thing, right? The industries that you think would not have a lot of cyber risk have far more than they do, because if you put yourself in the criminal shoes for a second, which is always a fun game, right? They are trying to go after the people that would least expect it, right? And if you have that mindset of like, well, we don't have that exposure, now you're the target. So that's why we always say that. Like, that's the number one underinsured risk right now, I think, in any business is the cyber and the fraud and deceit type coverage.
interesting. Okay, well, I'm gonna add that to the list of topics on this lineup because it's definitely, I mean, if we could barely, me as a carrier owner could barely understand like, hired and non-known, this cybersecurity, oh my God, that's gonna be another 30 minutes.
There's a learning curve to it for sure.
Yeah. Okay, so before we wrap up, though, I wanted to try something new. This is like our official third episode. So I'm trying to change things up as we go.
Okay.
I did want to do a rapid fire round, which I kind of warned you about, not really. But I appreciate you in advance being game for this. I have a couple statements that I've heard from other CLDA members, and I want to get your input. And here are the options: true, false, very false, or it depends. And
Okay.
feel free to elaborate on any of them as we go.
Okay.
All right, so first statement. I installed cameras in all my vehicles, so my insurance rates should automatically go down.
It depends.
All right. No accidents means I'm a safe company.
False. You might be, but it may not be because of no accidents, right? I think there's more to that you'd have to dig into, but you're on the right track. Let's put it that way.
If my drivers have clean MVRs, my driver safety work is done.
Very false, but you are way ahead of the game of most people. So I love that.
My safety manual is 200 pages long, so obviously I have an excellent safety culture.
That's a really long AI driven safety program, but it's impressive. I would say no. I mean, again, the tools are the tools and they're great to have. What you're doing with the tools is what makes the difference, right? Your knowledge of what to do with the tools is what makes the difference.
And on that, if nobody reads the safety manual, at least the underwriter will be impressed by how thick it is.
I mean, I'm going to say it's again one element. It's one element out of 50 that they may look at. So it could be true, but I don't know that it's helping you out at all.
Okay. A company can have a great loss history and still make an underwriter nervous.
Absolutely true.
Okay.
Yeah.
If my business doubles in size, I'll just tell my insurance broker at renewal.
No, false, very false. We like an ongoing conversation. I want to talk to my customers as things are changing in their world, good, bad, or indifferent. It helps us do what you want us to do. You're paying for that. You're paying for it. It's not, there should be no extra charge for that. You pay for the policies, and what you get with that is the counsel and the advice. Use it, use it, use it, use it, use it.
Okay. The best time to call my insurance broker is 2 days before renewal.
Absolutely not.
Sometimes spending more on safety can actually save the company money.
True.
If I buy every piece of safety technology available, I've officially solved the risk.
No, false.
Okay, cool. All right. This wasn't too bad.
No, it was great. I love that.
All right. Well, Brian, thank you so much for your time. I do want to leave the audience with something they can take back to their business. So, do you have any closing thoughts?
Oh, thank you for having me. I think this was awesome. I would be happy to do this anytime you want, Lorena, on any subject related to insurance and risk management and safety. I would just leave you thought that again, safety culture. Safety culture wins, and sometimes we know that is very difficult to do, to deploy. It takes a lot of time and energy and some money, and it's one of the last things you probably want to do, but it will have the biggest positive impact on your company and on your bottom line if you do it and you live it and you breathe it. Customers see it, insurance carriers see it, and it will benefit you.
All right, thank you so much. And if you want to contact Brian, look for him on LinkedIn, but also feel free to email b3@bbrown.com. And you might get Brian Jungeberg or the other Brians.
Yeah, there's 3 Brians, so you might get myself. That goes to Brian Palazzi, Brian Ice, and myself. We've all been around the space for a long time, and that just makes it easy on everybody. You don't have to worry about how to spell our names, and that goes to us, and we'll get back to you.
All right. Well, thank you so much, Brian, for spending your Friday morning with us. And also, those of you that watched live or are catching the replay, if you found today's conversation valuable, please like, comment, and share it with someone in the industry that could benefit from it. Next week, we have another exciting episode. We'll be talking about something that every carrier has, but not every carrier uses effectively, which is data. Because every delivery, every driver, every route, and every customer interaction generates valuable information. The question isn't anymore whether if we have the data, it's whether we're using it to make better decisions. And to help us explore that topic, we'll be speaking with Arthur Axelrad from Dispatch Science. So, everyone, thank you so much for tuning in. And until next time, keep moving the final mile forward.